1. Introduction to the offshore banking process. Offshore banking, as many individuals seek to engage in, is a process that involves opening an account outside of one's home country. The motivations behind pursuing offshore banking vary widely, from asset protection and financial diversification to tax optimization. However, many individuals fail to understand the intricacies of what offshore banking truly entails and the specific requirements, including the amount of capital needed for such ventures. This report will break down the offshore banking process, provide a list of countries that allow offshore accounts, and offer practical steps on how to open offshore accounts. The goal is to provide clarity on this often misunderstood financial strategy. Footnote: Offshore banking refers to the process of opening a financial account in a foreign jurisdiction to diversify assets, gain access to more financial services, and achieve financial goals such as tax optimization. 2. What is offshore banking? Offshore banking refers to bank accounts opened in foreign jurisdictions, typically in countries known as financial centers that cater to foreign nationals. Contrary to popular belief, offshore banking is not restricted to jurisdictions considered offshore by some, such as the Cayman Islands or Switzerland. Major economies such as the United States, the United Kingdom, and Singapore also offer offshore banking services to foreign non-residents. Offshore accounts provide benefits such as financial diversification, the ability to hold foreign currencies, and access to investment opportunities not available domestically. Footnote: Offshore banking is a legal method of diversifying assets, accessing foreign currencies, and utilizing financial services unavailable in one's home country. 3. Why bank offshore? The reasons for engaging in offshore banking are twofold: basic financial security and strategic tax optimization. On the surface, offshore banking offers a safety net by diversifying one's financial assets and ensuring continued access to funds should domestic financial systems become unstable. This is often referred to as banking insurance. However, the more strategic benefits include using offshore banking to minimize taxes and maximize returns through jurisdictional arbitrage. This involves selecting banking jurisdictions based on favorable tax treaties, legal frameworks, and asset protection laws, which is commonly used by international business owners and high net worth individuals. Footnote: Offshore banking not only offers diversification and security but also enables tax optimization through jurisdictional arbitrage, benefiting those seeking to manage wealth effectively. 4. Who can bank offshore? Offshore banking is available to a broad range of individuals and entities, with the primary requirement being that they must not come from a blacklisted or sanctioned country. Typically, non-residents of the jurisdiction are eligible to open offshore accounts, provided they meet the bank's criteria, which often include minimum deposit requirements, proof of identity, and a valid reason for opening the account. As long as you meet these criteria, you can open an offshore account in a reputable banking hub. Footnote: As long as you are not from a restricted jurisdiction, you can open an offshore account by meeting minimum deposit and documentation requirements. 5. Where can you bank offshore? Not all countries offer the same level of offshore banking services, and some jurisdictions are more favorable than others. High-quality jurisdictions offer strong regulatory environments, sophisticated banking services, and favorable correspondent relationships with other international banks. Notable jurisdictions that provide robust offshore banking services include Switzerland, Liechtenstein, Luxembourg, and Monaco, with deposit requirements often ranging from $500,000 to $2 million. For those with smaller deposits, countries like Panama and the United States offer offshore banking options. It is important to select a jurisdiction that matches your financial goals and offers stable banking conditions. Footnote: The choice of jurisdiction for offshore banking is crucial, as it affects the stability of the financial services and the level of service available to you. 6. How much can you deposit in offshore accounts? The amount required to open an offshore account depends on the jurisdiction and the specific banking services offered. For smaller depositors, countries like Panama or Singapore may require a minimum of $25,000 to $100,000. Larger depositors, typically those seeking private banking services, may need to deposit anywhere from $500,000 to $2 million, depending on the country and financial institution. Ultimately, the amount you deposit will dictate the quality and range of services you can access in the offshore jurisdiction. Footnote: offshore banking requirements vary by jurisdiction, with deposit amounts ranging from a few $1,000s to several million, based on the level of service and banking access needed. 7. The Offshore Banking Playbook: Steps to Opening an Offshore Account. Opening an offshore account involves 3 key steps: 1. Selecting the appropriate country based on your deposit capabilities, 2. Choosing a bank that aligns with your financial objectives, and 3. Completing the application process. When choosing a country, consider how much you can deposit and the specific financial benefits you wish to gain from the offshore account. If you're willing to deposit between $25,000 and $100,000, Panama and Singapore may be suitable options. For higher deposits, Switzerland, the UAE, and the US offer a wider range of opportunities. After selecting a country, the next step is selecting a bank that suits your needs, whether it's for tax optimization, wealth management, or access to foreign currencies. Lastly, completing the application process requires providing the necessary documentation, such as proof of identity and the initial deposit. Footnote: to open an offshore account, carefully select a country and bank based on your deposit level and financial objectives, then complete the required documentation. 8. Client profile considerations in offshore banking. Before applying for an offshore account, it is essential to understand the bank's desired client profile. Banks generally target specific types of clients based on factors such as country of residence, citizenship, source of wealth, and business activity. Understanding these preferences helps ensure that your profile aligns with the bank's expectations, minimizing the risk of rejection. Key factors influencing a bank's decision include your financial situation, the frequency of your transactions, and your connection to the jurisdiction. Footnote: it is vital to match your profile with a bank's desired client type to maximize the chances of your offshore account application being accepted.